Good morning, Chairman. We are now live.
Thank you, Tom. Good morning to you all. Welcome to this Pensions Committee. Just a couple of housekeeping points. When you speak, can you speak clearly into the microphone, close to the microphone, and switch them off when you've stopped speaking? There's no fire alarm expected, but the doors are behind you there. And of course, you meet in the car park, as you should know by now. So welcome to you all, and welcome to our new members, Councillor Stephen Bunny, Councillor Alan Briggs, and of course there are others which haven't materialised yet, so we'll see them shortly, I'm sure. Over to item 1 then, apologies for absence. Tom?
Thank you, Chairman. We have apologies from Steve Larter.
Thank you, Tom. Declaration of members' interests. Has anyone got an interest to declare? Yes, Mark, sorry. Yeah, can you put your microphone on and say it, please, and speak clearly into it?
Yes, after you mentioned it. I'm in receipt of an LCC pension.
Thank you very much. Yes, Tom?
Yeah, I'm a current member of the pension scheme.
Thank you, Tom. Right, no other declarations. We'll move on. Item 3, for those that were there, the minutes of the previous meeting held on the 8th of June. I'll take you through the pages. At the bottom of the page it says page 5, top of the page it will say page 1, just so you, those on paper know. Page 2 of the minutes and page 3. Could I have a proposer that they are a true record? Thank you, Mark. A seconder, please. There's only... I'll second it. All those in favour that they're a true record, those that were here, not you all. Yep, thanks. Any abstentions? That'll be you, Alan. Yep, and Stephen. Anyone against? No, that is carried. Thank you for that. Moving on then, item 4, which is on page 9 of your agenda. This is a report by the independent chair of the Lincolnshire Local Pension Board. Over to you, Roger.
Thank you, Chairman. I'll take my report as read, but I'd just like to draw out one or two issues. First of all, the Pensions Board concluded that the vast majority of employers comply with the rules on the payment of contributions and submission of monthly returns. On a personal level, I still find it disappointing that a few employers still can't pay the pension contributions on time or are late with the submission of returns. But that's a personal view. I mean, I've seen it. But anyway, we take Joe's team, try to take them in hand, and by the time they've taken several in hand, some more, they're the same. But anyway, once we get 270, 100%, I'll be delighted. Another point, Chairman, the board welcomed the reduction in the number of temporary bank accounts for pensioners and deferred members. And it's fair to say that we're keen that West Yorkshire make further efforts to ensure that the pension entitlements are paid to the beneficiaries. We recognise there are problems with the refund of contributions, and that really is a legislation problem. We also applaud West Yorkshire in their efforts on the pension dashboards. This is a national initiative. You've got a further report this morning from Matt, but despite the fact that the government are delaying the dashboards from, what, 23 to 26, West Yorkshire proceeding. The item that I wanted to bring to your attention pretty strongly, Chairman, is the delay in the sign-off of the 21-22 annual report and accounts. It's not a criticism of Joe or Andrew Crookham. And I did have a conversation with Andrew on Monday, and I understand that the accounts will be signed off at the end of July, but that's 21-22. And they were signed off as unqualified, which is good. So that's good news for Lincolnshire. And the delays are for reasons outside Lincolnshire's control. I mean, that's the annoying bit, and that's really what I just wanted to spend a couple of minutes on, if you don't mind, Chairman. I mean, there really is a national issue on which I personally, probably because I belong to a certain institute, have major concerns. I mean, at the 30th of September, it is anticipated that there will be around 1,000 report and accounts not signed off, some dating back to 2017-18. Now that is, I mean, the reason is it's a capacity challenge from the auditors and some local authorities where directors of finance have not been able to do them because of staffing. And there are also problems on the regulatory front. But for me, that is a worrying state of affairs where you've got delays in local authority and, for that matter, of the public sector audited final accounts. And that's very damaging to me in terms of financial management and stewardship for you as councillors. I've had conversations with SIPFA and the Public Services Appointments Commission concerning the backlog in the account being finalised and signed off. And I know there are discussions nationally between the Financial Reporting Council and SIPFA. And the Public Accounts Committee is also involved. I mean, they've had 3 meetings in the past couple of months. I'm unclear locally whether Lincolnshire can do any more. And whether indeed, dare I suggest, whether Martin Hill as the leader could actually raise it through his channels, because, you know, this is a serious situation. I really don't think that the government understand the issues on this. So that's my kind of rant, if you like, this morning. Finally, Chairman, I just wanted to say that Jerry Taunton retired as the employer representative on the board, on the pensions board, and he's replaced by Peter Allen from St Gilbert's at Stamford. So if there are any questions, comments, more than happy to take them.
Yeah, thank you very much, Roger. Councillor Allen.
Thank you, Chairman. I share Roger's frustrations to a certain extent, although luckily I think in Lincolnshire we do our utmost and are quite successful in terms of overcoming them, and we are in a far better position than many of the local authorities that you refer to, and you know there's numerous of those. It really is a consequence, I think, of guidance being changed, guidance being made more rigorous to a certain extent in terms of how you have to satisfy them to actually deliver your accounts. The external auditors been a lot more careful in terms of how they go about their business because of issues in the companies concerned, and it does make for a very difficult position. As I said before, and I repeat, you know, we are, I think, you know, one of the far better positioned local authorities in the country. I'm quite sure that comments are made very similar to yours whenever the opportunity arises. How high up the government agenda it is in terms of addressing these sorts of things, I'm not totally sure. I guess they've almost given up, as they seem to have given up on lots of other things. But I don't know whether Martin Hill could have any influence, and I'm sure he would probably take it whatever the opportunities they are, but it must be quite limited. You know, you've got to have a receptive audience to a certain extent, you know, for the comments that you're making.
Joe.
Yeah, I just wanted to say that John Presley, our external auditor from Mazars, is actually on the call, but will be covering an update on the 21-22 and 22-23 accounts at agenda item 7.
Michelle.
So just to answer a couple of Roger's kind of points, I think an audit committee are very well versed on this. So I think in terms of the agenda, you've just mentioned it's being addressed by Public Accounts Committee. I and Andrew were both at Society of County Treasurers Conference a few weeks ago, very much on the agenda there, feedback from government minister representation, do look, and from LGA saying that it's very much on their agenda with their politicians now, not just officers. I was at the SITFA conference a couple of weeks ago, very much all it was being very much focus of the day that I was there. There was a session where Tony Crawley was there as the lead for the national framework, but also Neil was there, who's just taken over as the chair of the FRC. And I think capacity is definitely an issue. I think capacity is an issue because the auditors are being asked to do more and they haven't got the capacity for that. I think FRC recognise that their requirement of the auditors to follow the letter of the code to the law has kind of made them so risk averse they've become almost frozen. I think the auditors are too scared to sign stuff off because of fear of retribution from FRC, and I think Neil has taken a much more pragmatic approach to that, and there's very much a recognition that the system's broken and they need to reset it. An awful lot of discussion around being more pragmatic and proportionate was the word I got out of the CITFA conference. So recognising that we still have a requirement to follow the code of practice, but we also have a duty to report what's in the public, you know, good and interest. So hopefully, with some key movers in there, I think hopefully there's a recognition we need to change our approach, and Neil's going to be very much part of that, I think, from the FRC.
Thank you, Michelle. Roger.
Can I just come back? I mean, I welcome those comments, Chairman, and clearly it has been taken seriously. As to what will be done, I mean, okay for the flexibility, but I mean, my understanding is, and this results from the abolition of the Audit Commission and prior to that district audit, so several of the big firms have just withdrawn from the market because of the fees that they charge. And, you know, if you look at Mazars' fees as a case in point, it is so small for a £3 billion scheme, and it's just simply not profitable for them to do it, particularly given all the risks. So the PwCs of this world have just fled from the market, which means that there are fewer partners in the firms that can sign off.
Thank you, Roger. I think, as Joe mentioned earlier, that obviously John from Mazars is going to be talking on item 7, so we'll get more information and update at that point, so if we can hold fire till then. Certainly, the recommendations are that the committee note the report and consider whether more can be done both locally and nationally to resolve the crisis over the delays in producing and auditing the accounts. I think we've done that, we've discussed it. So basically I'd ask the committee to approve by noting the report. So all those in favour, please show. Thank you, that's carried. Thank you, Roger, for your report. Hopefully your fears will be addressed soon. Moving on, agenda item 5. What I'm going to do this time is I want to read through the recommendations to you before we actually go in to the report itself, so that you're aware of what we're going to be asking at the end, and I'll be trying to do that going through the agendas from now on. So what the recommendation is, or are, I should say, are to consider and discuss the report and agree whether any action or additional information is required, and secondly, to approve the additional post to the pensions team. That will be a vote, okay? So just keep that in mind. And with that in mind, over to you, Jo.
Thank you, Chairman. So this is the standard quarterly report, just providing an update across all aspects of the fund. I would just normally highlight any key points, but as we have some new committee members, I thought it might be useful just to go through section by section. So please do ask questions if you have any. So section 1 on page 13 sets out the funding level change and the performance over the period. More information on the underlying managed performance now comes to the investments meeting of this committee. So the next one there is being held in September. Paragraph 1.2 sets out the asset allocation with property under its tolerance level and cash over its tolerance level. Relative performance has been slightly above benchmark over all periods shown other than inception, where it's slightly behind. And the funding level has increased to 107.8%, a surplus of 216 million as shown at paragraph 1.11. Section 2 on page 16 and the appendix on page 29 shows how the fund meets the requirements of the pensions regulator. New members of the committee have a 6-month window in which to complete the pension regulator's training toolkit. So once that's done, hopefully we'll be able to move to green there. Section 3 on page 17 updates the committee on any breaches that have occurred over the quarter. The standard breaches there that's been added of the late payment of contributions or data by just a few employers. This is another change with our committee meeting structure, so we'll now be bringing an annual paper to the committee that will be looking at breaches and other employer monitoring, so to give you more information on a wider range of things that our employers are doing. So that will come to this committee in January. Section 4 on page 18 updates any changes on the risk register. There has been one change on there at P1, a people risk, and that's the loss of key staff and knowledge and skills. This has increased and the status is limited and currently a negative direction of travel, unfortunately due to the long-term absence of the Accounting, Investments and Governance Manager in the team. We are looking to improve the resilience and capacity in the team through recruiting to new positions, and I'll set out more information on that in Section 8. Section 5 provides an update on what's been happening with Border to Coast. The last joint committee meeting was held on the 13th of June, and the next one is the 28th of September. And as always, papers will be shared with the committee beforehand. So any questions or comments, you should feed those back, please, through Councillor Strengle to raise at that meeting. Paragraphs 510 to 514 set out some of the work undertaken by the Officer Operations Group, which are my equivalents across the 11 partner funds. And I mentioned in there about the long-awaited consultation from government on pooling, which was dropped on us on Tuesday. So having waited since 2019, we now have sight of that. There's 5 areas to cover, so this unfortunately hasn't been able to be included in the paper given the time that it was released. The 5 areas that it's looking, though, is about accelerating pooling with fewer pools going forward, so we have the 8 at the moment. A requirement to invest up to 5% in levelling up assets to support the UK, an ambition to increase investment into high growth companies via venture capital and private equity, amendments to the regulations around the use of investment consultants, and then a just technical change on the definition of investments in the regulations. Now there's been a working group set up with Border to Coast and the partner funds to look through this. We had our first meeting yesterday evening. So once we've had chance to digest that in full, we'll obviously be reporting back to the committee to bring a draft response. The expectation is there will be a response done from Border to Coast with the backing of the Joint Committee, and then the underlying funds will also have a response, which we expect to be very similar, but there may be some slight differences of opinion over some of those areas. Section 6 at page 20 updates on the work of internal audit, and they've sought assurance on the work that's done by West Yorkshire's internal audit team from Bradford MDC, and the committee will be reassured to see that that was a positive outcome. Section 7 on page 21 advises the committee that we've had a 12-month extension approved to the tender for the funds custodian, purely given the current resource constraints that we have. So we will be looking to do that next year, and Northern Trust have happily taken that 12-month extension. Section 8 discusses the proposals on the team structure, and this is where the recommendation is to recruit an additional career grade post to complement the post that was approved in 2021 to address the capacity issues, given the ever-expanding requirements that are being placed upon us in the LGPS. In addition, this should future-proof the team with improved resilience, continuity and succession planning. And then the final comments I'd like to make before I open to questions are just on the training and conferences at section 9. Details of conferences held since the last meeting are shown at paragraph 9.2, and the conference highlights that Hyman's produce are attached at appendix E. The upcoming training events are detailed at paragraph 9.5 and have been mentioned in the weekly emails that I send out, so that does include the Border to Coast conference that's coming up at the end of September. So I'll just break for a moment to ask if members would like to share any information on any conferences or training events that they have attended recently.
Thank you, Joe. Yes, I'd like to comment. At the PLSA conference I attended a few weeks ago down in Gloucestershire, one of the big talking points was about pooling, and it was about whether 8 was the right number throughout the country or whether 1 was the right number. I think most people decided that 1 was not an option, basically, because 1 pool would mean the whole country, basically, including Wales and Scotland. So, generally speaking, it ended with no decision at all. So and nobody could sort of agree whether there is a right number between 1 and 8. But there's certainly some pools are not doing as well as others. And we're, you know, without banging the trumpet or playing the trumpet too much, we're top of the tree, basically, in Border to Coast. Well thought of. Spoke to a lot of colleagues, a lot of fund managers down there. And, yeah, Border to Coast are doing very well. It's not a reason to be complacent. We have to keep our finger on the pulse of everything that's going on and make sure that Border to Coast continue to be at the top of the tree. Also mentioned one of the training events was about the dashboard. I'm sure Matt might like to give us a better update than I could at the moment. Obviously the dashboard is going to be a great asset to the members of the scheme. And the other thing was about the training side of things. What you didn't mention, Joe, was Lola. I'm very disappointed that having done all 6 modules on Lola, I now find I've changed it to 8 and I've got to do all 8. So the other 6 didn't count for anything. I should have waited like you, Mark. Sorry for singling you out there, but you had your hand up about that earlier on. So, yeah.
Indeed, Chairman, you should have.
Yes, but there you go. That's my penance for being too eager. But there you go. Joe, do you want to comment?
I was just going to say I'll cover Lola in the training paper on paper
all right.
8.
Sorry, you're coming to that anyway. Yeah. Any other questions, please? Okay. Just one final note about conferences, that all members of this committee are eligible to go to conference. Okay. There's obviously the ones that are coming up, which is the investment conference, which is, I think, in your best interest to go to that. It's a very good 2-day conference there, 28th, 29th. John Haw, as rightly says in the paper, John comes under Joe's department, and John will book your accommodation and make sure you are registered on the committee. And indeed, if you need train tickets, etc., he'll do that as well. So anybody got any issues with that or worries, either see Joe or myself, and we'll help out on that. But yes, it would be nice to see. It was good to see Mark Whittington. I don't know if Mark's on the upstairs now, but I think he would agree it was a very good conference, PLSA. And you can go to that next year if you wish. That's all I have to say. Any other questions, comments? I want to bring you back then to the recommendation on page 13, which is in 2 parts. First of all, consider and discuss the report. We did to a certain extent, and agree any action or additional information that is required. And secondly, to approve the additional post to the pension team. So on the first one, show of hands please that we've discussed it. Thank you. That's carried. And secondly, to approve the additional post to the pensions team. Can I have a proposer first, please? That's Councillor Mark Allen. A seconder, please. Councillor Stephen Bunny. All those in favour, please show. That is carried. Thank you very much indeed. Thank you, Joe. Moving on, item 6, Pension Administration Report. I'm going to hand over to Matt, who will take us through the West Yorkshire Pension Fund Administration Report. So over to you, Matt.
Thank you, Chair. Morning, everybody. This is the admin report from West Yorkshire Pension Fund for the period 1st of January to the 31st of March. Point 1.2 about KPIs. We've highlighted some that did not meet for this period. For the most part, the cause was really staffing. It was to do with inexperienced staff and experienced staff training new members of the West Yorkshire Pension Fund. Members of this committee will remember that recruitment has been ongoing. We have a rolling plan and we hit a peak of new members in our organisation at the end of 2022. So that does have an effect on the performances. The one there that really stands out as perhaps a concern in black and white at the top, death in service, because obviously we've lost an employee. There'll be benefits to pay, possibly to their families. Just had a little bit of look at those, how long it took us to complete those, and the 3 that failed by 3 days for 2 cases and 1 case by 4 days. So we met legislation, we weren't too late, we didn't cause any further issues to the members' families. Looking at the others, they are primarily areas where there are no payments due, so quotes for deferred benefits. We seem to have an upturn on these quotes, people asking for information on their deferred benefits. So the members have left public sector, or at least left Lincolnshire Pension Fund as an active employee, but at the time of leaving they were too young to receive their benefits. They're deferred to retirement age. Now they're approaching us to ask what they would be like, what the values would be like if they were paid now. I assume most of these are early. So there's nothing due for payment there. Deferred benefits set up, that's as somebody leaves, we send them a letter and we say to them, you have a benefit deferred. That meets the statutory requirement. The values follow later. Transfers are always a challenge because we're dealing with other local government authorities. But again, we've got a lot of training in that area. Monthly postings weren't affected by training, but by sickness. We had an additional spike in COVID at the turn of the year. And refund quotes, we're looking at the old ones. Roger's already mentioned, you know, we've got a legislative requirement to get refunds paid within 5 years of the date of leaving. So we're working on those older ones to try and get those out before they meet the deadline. And update member details, again, no payments due. This is just updating additional information on forms or records. Looking at staffing, as I said, we hit a peak of recruitment at the back end of 2022. So though we do carry some vacancies, there aren't too many through this period. We are still carrying 5 in the service centre, and we are continuing recruiting to those. And the technical team, we have a vacancy, as well as the employer relation team, which is a new post, an additional post. Looking at 2.2, just very quickly, we've had an audit, reimbursement of agency payments. The rating was excellent and there were no recommendations for improvements. That's very good. The budget, we've given you the totals in this report at this meeting. We can see that the cost per member has risen compared to last year. Several factors. We know that we've got additional work to do for the dashboard. We know we have additional work to do for McLeod and the removal of age discrimination. There's also been a cost for recruiting those staff and training those staff and providing those staff with hardware. And generally speaking, you know, other costs, whether it's, you know, for whether it's salaries or buildings or whatever it might be, or costs of running the offices, everything is going up in a cost of living crisis. 2.4, the shared service risk register, is relatively new, something that we put together just after I started and review on a regular basis. This is about the partnership at Lincolnshire, Hounslow, Barnet and West Yorkshire and the risks that we face. We meet every 3 or 4 months and we discuss and we amend this. But generally, these are shared risks between the partnership as opposed to the risk register that Joe talks about for Lincolnshire. Monthly postings, 2.6. Now, I'm a little bit disappointed we haven't gone live with this. If there is a good thing with this, it's because our robust checks to make sure that this is a secure digital platform or portal for your employers and our scheme member data. So we are still running cyber checks, and as soon as we get the cyber clearance, then this will be released as a go live. For those that have not heard of this before, this is a way in which your employers can upload their information on scheme members every month onto a digital portal, and be self-checked. So once they complete all the fields, if any of them flagged up as red, they won't be able to send it. They will know where the errors are. They can go back and look at those and send them. Additionally, if they really don't know what that information should be or they don't have it, there's like an escape button. And then they can send that to West Yorkshire, and that will alert us that there may be an issue with this return, or there's lack of understanding or data, and we can pick that up, and then we can just get straight in touch with that particular employer and resolve their issues quicker than we do at the moment. So as I said, cyber testing, so being delayed, but once it's ready to go, I think we've got 7 of your employers ready to get onto that straight away. Pension scams pledge. West Yorkshire Pension Fund have now signed up to that. Now, just to remind everybody, the pension regulator, one of their biggest priority is to protect scheme member benefits. And there's a lot of scammers out there. We see the adverts, you know, don't let somebody enjoy your pension, you know, they're offering a med somewhere on their jet ski. And they're encouraging pension providers, public and private sector, to pledge that we'll do everything we can to protect scheme member money. And this is particularly relevant when those scheme members ask to transfer their benefits elsewhere. So to be able to sign up to the pledge, our officers and our pension board had to take the TPR's toolkit module for scams. So we've done that, we've signed up to the pledge, and we've joined 4 other pension scheme providers in the UK. Point 3.0, regulatory update. There's a couple of things I just teased out of the normal update. Annual revaluation date change. Probably doesn't seem a big deal for anybody here. It was a bit of a shocker. I'd just like to point that out. Very simply, if I can make it simple, the local government pension scheme was out of step with HMRC regulation. They required that we use a revaluation figure in the previous tax year. Now, our regulations allowed us to increase pensions from the 1st of April using the September CPI value of the previous calendar year. In other words, the same tax year. Hadn't been a problem historically since 2014 because inflationary amounts have been 1%, 1.2%. But this year, the difference in those values was 10.1% to 3.1%, a 7% difference. That in turn meant if the regulations hadn't been amended, our members would have had additional scheme growth that HMRC would have treated as taxable. So I think it was the 23rd of March, so that date might not be quite right, but I think it was the 23rd of March, we passed new regulation that meant we could push our revaluation back to the 6th of April, just 5 days, but into the next tax year. And then we were able to legitimately use the 10.1% and our scheme members do not have to pay any additional tax. If that didn't make any sense, please shout. It's quite complicated to explain. So it was an awful lot of work. We did that in time. The scape rate, and anyone here with an investment background probably understands this more than I do, or the superannuation contribution adjusted for past experience discount rate. It's not just in our valuations, it's not just within the actuaries' formulas for contributions, it's embedded in many of the calculations for benefits, transfers, even divorce calcs. That has changed. We were required to suspend that right at the end of this period, at the end of March. So that means that some of our processes may not in the next period achieve their target because we have been told to suspend them. Some of those revalued or revised factors we have now received, and we can now start processing some of these, but needless to say, it will have an effect on our key performances in the next period. And pension dashboards, been mentioned a couple of times. Very simply, for those that don't know, it's an online platform where a scheme member, for any scheme, public or private sector, will be able to see their scheme values, if they are values they are currently accruing or values that are deferred to retirement age. They'll be able to see those values, they will see the administrator's contact details, and they will be able to get in touch, provide us with new addresses, ask for estimates, whatever it might be. We were supposed to have a staging date in September this year. Most of the public sector and the private sector were ready to go. DWP were still having connection issues. And basically their software wasn't in the right place. So they paused it some months ago. And now they announced a few weeks ago that there's now a revised connection date or completion date, and that would be the 31st of October 2026. As Roger's already alluded to, we have continued on the same path and our original timelines for this September, so we are in a good place, and we've been working with the pension regulator so they know that we're in a good place. But what we're waiting for now, and it is supposed to be before recess, and we are really running out of time, we will be given another staging date, and it will be somewhere between September this year and the 31st of October 2026. So in that respect, we're not concerned because we're working towards the September. If anything, that will give us more time just to iron out any of the wrinkles. But we are in a good place. As I said, we've been working very closely with the regulator on that. That is the end of my update today. If there's any questions, please let me know.
Mark?
Thank you, Chairman. I can only ask two questions. I was going to ask you the KPIs that have been missed. The one that worried me a bit was the death in service benefits, because it must be quite a difficult time for families. And I presume everyone wants us to try and get our act together as quickly as possible to reduce any more concerns. From the sound of it, the miss bit was not significant, so I was very comforted in terms of what you said. But bearing in mind that one of the comments you made is to do with resourcing, I looked at the risk register, and it's a question that we have raised with yourselves in the past, and it's to do with increasing the number of partners that you actually try and service. And I think at the time we raised this, which must have been 18 months or even 2 years ago, you indicated that you were quite happy with the partners you got and the service that you were providing, and you weren't particularly looking to expand the number of partners. On the risk register, it is number one, though, that if you were to do that, whilst you might wish to maintain the service level agreements that you got with the existing partners, or you would try and ensure that you maintain the existing service level agreements with it, but bearing in mind, the resourcing issue, which is difficult across the sector, and you're certainly experiencing it. What is your view at the moment in terms of expanding the partners within the sort of alliance that you operate?
I don't believe we have an intention to do that right now. There's several factors. You've mentioned the resource, but then we've got regulation and legislation. We've mentioned the cloud, we've mentioned dashboard, it's all coming. We are, with the current partners, about to enter in discussion about a refresh. I think we're working closer together now. We're not just making decisions and then saying to the rest of the partners, this is it. I think we're having those discussions, say, well, we need to consider this or we need to do that. What do you think? So we are working closer as a partnership. Now, ultimately, I don't have the final say, but in my title it says business development, and what I can say to you is I'm not currently actively looking for another partner. So that's about as conclusive as I could be. Hopefully that's sufficient.
Chairman, if I can just come back.
Matt, can you turn your microphone off, please?
Turn it off now. Turn it back on. It's very difficult to say never. I appreciate, and I suppose and I think you answered the question. My further question, to a certain extent, is that we would have some notice of whether that was something that you had in view or been asked to consider, because to a certain extent, other pension funds may come to you, and it would put you in a difficult position if you just said no, particularly if they were in a difficult position. So we would have adequate notice, and we would have time to work with you to try and deal with any sort of aspects that come out of it, with your basic underlying undertaking that service level agreements with our particular pension fund would not suffer.
Joe.
Yeah, just to say that has been one of our concerns as shared service partners, and we've been quite vocal in that. So it is something that we would have that discussion at our every 2 months shared service meetings and at collaboration board if there was a thought that actually we now want to go out to the market to see if there's any more people coming in. So that's absolutely something that we keep our eye on. I just wanted to add something, if I may, just on the monthly posting, really just to give a bit of a heads up in the impact it might have as this is being rolled out on some of the compliance of our employers in getting their information to us by the 19th of the month. I'm trying not to look at Roger here. Because what it means for employers is that they have to switch around how they're working. So at the moment, the data comes in with the cash, it has to be in by the 19th of the month, and that counts as having met the criteria. Now, that data may not be perfect. There may be errors in there. There may be queries that have to be gone back to before it can be fully processed and attached to members' records. But as far as our monitoring is concerned, because we don't see that element, they've met the requirement of getting it on in time. Now, with the issue of it only being able to come through in most cases once it's compliant and got everything in, employers are going to have to switch the workload to before the 19th of the month to get that data on the system cleaned up and fully submitted. So there may be an impact, hopefully not, because I know there's been a lot of training that is being done with employers to make them aware of this. I've been involved with LCC, listening to how they're planning on doing this as well. So hopefully there won't be an impact, but it's really just to give you a heads up that there may be an impact on the breaches of late data.
Tom.
Yeah, so just piggybacking onto that really. I don't know if you're aware, but the teachers' pension schemes had a similar monthly posting scheme in place for about a year. It's very frustrating. As one of my colleagues said, it's very computer says no-y. So you'll enter all your data and it'll come up with loads of red warning and red stop errors. And people like me who are putting that information in just think, I've no idea what the error is. I'll try and do it the next day. And then the next day comes and you forget about it. And but it's what Joe said really, that I think you'll find some employers will start missing those dates and they'll blame the system, this new system in. So if you wanted another employer onto your trial, I'm more than happy to be on there, but I will be quite blunt with my criticism.
Thank you, Tom. Matt.
Yes, just quickly. Yeah, I mean, yeah, if you would like to know more about it, yeah, if you'd like to join. I don't know where we are, but I can put you in touch with one of our finance teams, and then they could show you what this looks like and what it means. Because as Joe said, some of the employers have already had some training, so they are aware and they're ready to sign up. So I think it's accepted that long term or longer term, it's going to be really good. But I accept your point, you know, and that's the issue. It highlights, you know, what employers might not know, and employers do change their staff quite frequently. So sometimes that knowledge sits in a specific person. They move on or up, and then that employer would deem to be, you know, struggling for their returns. So we want to work with everybody, whether that's new coming into this program or continually updating your staff. But I think it's the way forward. It's what everybody seems to want, because the data then is clean and accurate, the most clean and accurate that it ever could be once it hits those member records.
Thank you. Thank you, Matt. Any other questions? Yes, Peter?
Yeah, I don't want to labour the KPIs too much. I think Councillor Allen's covered that. But we're sometimes judged as Lincolnshire Pension Fund by the performance out of West Yorkshire, because you're dealing with all the queries that all the submission people are involved with. And I mentioned a company that I used to be chairman of for quite a while. I'm no longer there, but I still speak to those people, and they are finding issues with information coming out of West Yorkshire. I've mentioned it to Joe, so I don't want to go through this individual company at the moment, but I'll ask Joe to speak to you on that. because, you know, in the next quarter, I would like to see the improvements against how these sit at the moment. We've got 7 areas here that you're suffering with. And I would ask Joe to just check that next time this comes to us, we can do a benchmark on how it is in 3 months' time against how you've reported here. Because I'm not confident that it's going to improve. So I think you need to prove to us that it wants to improve and it will improve. So I'll labour no more than that.
Matt?
That's fine. I totally accept the point. That's why we monitor them. So yes, those areas will be monitored. We'll compare the reports for the next one. The death in service is the one that concerned me, which is why I did the extra little bit of digging for you. But can I just reiterate that point about the scape rate and those interfund, the transfers, because we had to stop processing. There was a national thing that those KPIs may not have improved because we will not have processed any. Okay, so we'll see, but that's out of our hands. Other than that, I agree, and we'll look at these.
Thank you. Any other questions, comments? Thank you, Matt. Yes, you may go if you wish. Thank you. The recommendations on page 41 are that we're required to discuss the activity and performance of the administration service during the last quarter. I think we did discuss that, and I'd like to see a show of hands that we agree that has been done. Thank you. That is unanimous. Thank you. That is carried. And thank you, Matt. See you next time. Moving on then to item 7, which is the annual report and accounts for 2022-23, draft annual report and accounts. Just a quick look at the recommendation first, that the committee approve the draft pension fund annual report and accounts. So bear that in mind when we go through this paper. So I'm going to hand over to Joe. Joe.
Thank you, Chairman. This paper brings the draft annual report and accounts to the committee for approval. It's attached at Appendix A, a rather long document, but there are the policies at the back under the additional information haven't been included to try and make it slightly shorter. You'll have seen these at the March meeting when we had the policy approval paper. Before I go through that, because what I'd actually like to do is use this paper as a bit of a training session and walk you through the annual report section by section, just to explain what it's there for, why it's there for. But I would just like to invite our external auditor in, John Presley, before that, to explain where we are with the 22-23 accounts and provide an update on the 21-22 accounts. So hopefully John will appear on screen once a button has been pressed.
Hello? Hello, hello?
Welcome, John.
Thank you very much indeed, Chair. Further to what Joe said, I'll begin by presenting our audit strategy development update report. This outlines the work that we undertake to give an opinion as to whether the accounts have been prepared on an appropriate basis, and a consistency statement as to whether the information in the pension fund annual report and the information within the accounts themselves are consistent. With regard to matters I would like to briefly highlight, as in previous years, the significant risk we've identified is the valuation of level 3 investments. That is to say, the harder to value investments. We target our work around that to some degree because that's where errors can creep in if there are going to be sort of errors in coming to a view on the overall asset values of the fund. With regard to other matters outlined in the report, I just outlined very briefly that our fees are broadly in line with those of the previous year. The materiality we were working to overall is just over 30 million. We have a specific materiality for the fund account at 13.5 million, and we report to the Audit Committee any errors that are greater than 900,000 that we identify through the course of our work. With regard to the work that we're undertaking on the 22-23 accounts that you will have just seen, as reported by Joe, we're expecting to give our opinion on those in November. We're doing work at the moment on site with the team, mainly working remotely, it does have to be said. And we'll be doing more work in August, September, and a small amount in October before we give our opinion. So that's it really in a nutshell in terms of 22-23. With regard to 21-22, we're undertaking work to establish whether the membership information used by the actuary for the updated triennial review valuation is correct and appropriate. We're hoping to complete that this month, and after that, that should enable the opinions to be given both on the pension fund and on the county council main accounts, and that work is sort of ongoing at the moment. With regard to other matters that were picked up earlier on in the meeting, all I can say is I think that Michelle and Roger outlined the dynamics at play very well in terms of the FRC, PSAA, delays, inspection regime, number of audit firms in the market, and the number of technical accounting matters that have been experienced this last year or so. And those are causing issues, and there's no getting away from that. And unlocking them is, I'm afraid, somewhat above my pay grade, and does involve sort of the need for action nationally in terms of regime at play. So that's a brief update from myself. And on that note, I'd like to open up the report for any questions that members may have.
Thank you, John. Any questions from members? I've got a comment that perhaps is a question as well, which is on page 70, page 70, just for clarification, obviously, Aberdeen Standard is mentioned, which is an amalgamation, of course, of Aberdeen Asset Management and Standard Life. But on page 77, quite rightly, it then mentions that Aberdeen Standard has changed its name, and it's now Aberdeen, and the logo is ABRDN. So that will probably, all future reference to Aberdeen Standard probably go, I would imagine. It's just a comment, John, but I'm sure you'll agree with that.
Indeed.
Thank you. Any questions? Sorry, Roger, yes?
If you'd allow me to ask a question.
Of course.
In the light of your comments about the national position, John, I just wondered whether you do see any light at the end of the tunnel, or whether it is some time off, given PAC's involvement. You're closer to it than me.
I would like to think there is some light at the end of the tunnel in terms of the national discussions that are taking place, particularly in relation to some sort of tempering of this FRC regime and the extent to which the audit firms have been so heavily risk averse in terms of their approach. Because as you outlined earlier, that combination of relatively low fees and a very, very tight regulation regime that people then become very risk averse, or rather auditors become very risk averse to going ahead until they've checked absolutely everything, is not a recipe for things being resolved quickly. I believe the national discussions are making progress. Do I think that will result in a change for how things are done for 22-23? No. Am I hoping that it will result in a change in terms of 23-24? Yes. Am I certain about that in terms of the discussion that the department are having with the various regulatory bodies? I'm not absolutely certain as yet. We will know more come sort of October, November time in terms of those discussions and what arrangements they are putting in place. But I think you will have an outline awareness of that yourself, Roger.
Thank you. Any other questions? No, can't see any. Have you got any comments, John, this just from a personal point of view, regarding net zero?
No, I haven't. No, I wouldn't wish to comment on in a personal capacity on that.
Okay, thank you. It was a bit cheeky of me, I must be honest, but obviously it's discussed quite a lot at conferences, and it was at the last PLSA one as well. Which reminds me, Joe, I had an email from one of the fund managers at Aberdeen, funny enough, requesting something. I'll pass that on to you later if you can remind me, please. No other questions, comments? Thank you. Thank you, John, for your presentation. If we come back to the recommendations on page 63.
Sorry, excuse me, Chairman.
Sorry?
Can I go through the annual report
That would be a good idea.
first, please?
Yes. I knew I'd slip up somewhere along the line. Thank you, Joe.
Thank you. So with the new structure of the committees, we're now looking to try and bring a bit of training in to all of them. So I thought, given that this is, say, a really lengthy document, but actually it's a really good go-to document, if you can take the time to read it, because it does cover every aspect of the pension fund and what we do. So most of what is in the annual report is actually required under best practice set by SIPFA and the Scheme Advisory Board. And it does, as I say, cover all aspects. There's the management of the fund, the investments, administration, and of course the full accounts. The accounts section, as you're aware, also sits within the council's statement of accounts, which is why they're interlinked for audit purposes. So I am, as I say, I'm just going to step through every section. It won't take too long. I'm not going to read it through for you, but just to explain what that section's about and what's in there. So please do interrupt if you have any questions as we go through. I think that's probably easiest. So the management arrangement starts off, and I'll use the annual report page numbers if that's okay. So that's on page 2 of the annual report. That just sets out who the committee members are, who the advisors are, the fund managers, and thank you, I've picked up that mistype of Aberdeen Standard and will amend that, and then all the other key service providers in the fund. That's followed on page 4 by the report of the Pensions Committee. So this is just a brief update on what's happened over the year, covering all the key areas that sit within the rest of the report. Page 6 is the management report of the administering authority, and there's quite a lot in this area. So starts off with the scheme membership. So the past year you can see there's been an increase in both contributing members and pensioner members, and the deferred beneficiaries have remained stable. Then we have the asset allocation. So this is both the strategic, where we look to be over the longer term, and the actual asset allocation at the year end. This doesn't include the amendments that were agreed in the March committee, because they still have yet to be fully agreed as to how that, for example, how that 10% reduction in equities will play out, whether that's from UK, global, etc. So this is showing the strategic asset allocation before those changes were agreed at the end of March. Then it's on to the fund performance. So that's over the last year and longer term, over the last 10 years, comparing that to retail price index and public sector earnings. And then following that, the performance is broken down against all of our investment managers, showing the 1, 3 and 5-year returns against the benchmarks that have been set for them. Next, it's the top 20 holdings in the fund, and that shows that makes up 95.5% of the overall value. And the move we've had over the last 5 years away from the segregated managers into the pooled funds has meant that that top 20 is now much more concentrated, because actually it reflects the full holding in a pooled vehicle, as opposed to previously under the segregated accounts, it would have reflected holdings in a single company. So it does look a lot more concentrated now. Then we have the investment managers all listed next and the allocation that they have under each asset class. And that shows just the full breakdown of how the fund is managed, and we also just name who our custodian is. Then we look at the funding level, just showing how it was at the last valuation in 2019 and how that compares with the 2022 valuation. The next section is all about stewardship. How does the fund meet its stewardship responsibilities? What are Border to Coast doing that we've agreed with them for their targets? Our work with the Local Authority Pension Fund Forum. Then it's on to the key risks in the fund, how we manage those, so setting out those key risks in there and what are the controls that we have in place to manage those, and you'll all be familiar with that from the risk register. And then finishing that section is the business plan and budget that came to the March committee. So there's a lot of information in there, but it gives a really good and hopefully clear snapshot into the fund. Sorry, it's a question.
Sorry, do you mind if I just ask a question?
Yeah, fair.
It was on the bottom of page 18 on the triennial valuation. I'm just checking the dates because I'm sure our employer rate went up in 2023, April 2023. So I was just checking that if that's a typo or whether I could have waited another year to pay our increased employer rates.
Turn your mic off, please, Tom.
Sorry, I'm just trying to find it. Page. Sorry, what page?
Page 18 of the report, but page 85 of the agenda. Triennial valuation.
Yes, thank you. That is an error there. I think there's about 70 odd thousand words in there, so it's helpful for other people to read them. I will get that amended. Thank you.
Well spotted, Tom. Thank you, Joe. Do you want to continue?
Yeah, sorry. So the next section then is the employer contribution rates. That's on page 21. So that sets out for all of our employers in the fund the contributions that they paid over the previous year with the actual amount that's been paid in by both employers and by employees. And I think that's quite useful for people to understand the breadth and number of employers that we actually have to manage within the Lincolnshire Pension Fund. Then we move on to asset pooling. So this has a look back, sets the history of the asset pooling, how we came about with our relationship with Border to Coast, the oversight and the governance structure there, the assets that we've already transitioned to that point, and the assets under management split across pooled, so with Border to Coast, passive, so under the management of Border to Coast, but not actually directly managed by Border to Coast, and everything else. It also identifies those assets that haven't transitioned and what our plan is for them, and we have to explain if they're not transitioning, why not. If we're going to retain the external managers, for example, Morgan Stanley. And then the final part in the section shows the net savings that have been realised to date from pooling. Page 34 is then the annual report of the local pension board. So the chair of the local pension board provides this, and that looks back across all the work that's been done over the year and highlights any concerns that the board has on the fund. Next, we move on to the investment background on page 38. So this covers the investment markets over 22-23, showing performance of the major indices and then a narrative across the main asset classes on what the key points were over the year. So I think some useful background just to see perhaps why the returns have been as they have been. And then we move on to the administration on page 44. So this sets out how we actually pay our pensions, how we administer the benefits for our scheme members. The key performance indicators over the year with direction of travel against those. This information is all provided by West Yorkshire to meet the reporting requirements set out by SIPFA. The following sections then cover how we are against our industry standards, how many new pensions have been paid over the year, if we've had any overpayments identified, and what has then been recovered in that and what has been written off. Then shows the results from the latest National Fraud Initiative. We have an indication of value for money there on the next section, looking at cost per member across the 3 areas of administration, investment and oversight and governance, and then how we compare with the highest, the lowest and the average LGPS funds. Then it shows the staffing numbers in the shared service, key activities that have been undertaken by the admin team over the year, the data quality figures for the common data, then a bit of information just on the disaster recovery plan, what's in place so that we're assured that should something go wrong, we're still able to have our administration service, and then finally the customer satisfaction levels across the year. Following on from that is a summary of the LGPS contributions and benefits, and that's the structure of the LGPS across the 3 schemes that we manage. So the pre-2008 scheme, the 2008 to 2014 scheme, and then the 2014 care scheme. So that members should be able to just go in and understand simply what their benefits entitlements are under each of those areas if they've been in the scheme then. Then before we move on to the funding accounts, the last part there is then the knowledge and skills policy and report. So this is another area that's required by SIPFA, and it sets out what we have in place to ensure committee members meet the required level of knowledge and skills. So it details the areas that are covered in the committee meetings and references them to the knowledge and skills framework that SIPFA publish, and identifies the responsible officer for ensuring that these training policies are implemented, and that's Andrew Crookham as Exec Director. And then it also sets out the attendance over the year at committee meetings. Page 64 starts the largest part of the report. So this is the fund and accounts, and it's actually probably the most complex for a scheme member to understand, but the part that the auditor is most interested in. So the format and basis of preparation are largely dictated by financial standards, and these are interpreted for local authorities in the Code of Practice prepared by SIPFA. In addition to this, we adopt a set of accounting policies which says how we will apply these standards, and these are set out in note 3, which is from page 68, and these get approved by the committee each year in March in advance of preparing the accounts. The accounts summarise all the financial transactions that have taken place during the financial year, and then they also give a snapshot of the value of the fund assets at the balance sheet date, which is 31st of March. And these are summarised in the 2 main statements, which are set out on page 64 of the report. The notes to the accounts then provide further analysis of the summary figures included within the accounts, in addition to other information about the funds, such as information on the funding position, on both a valuation and an accounting basis at notes 17 and 18, and capital commitments that we have to make future investments into infrastructure and property. That's included in note 24. So I'm just going to then run through really, what do they actually tell us about the pension fund as at March 31st, 2023, and during the year. So within the fund account, we have the contributions and benefits. So you can see that the income received by the fund from contributions exceeds the amount we've paid out in benefits. So even after management expenses, the fund has still received more income than it pays out. So that's positive that we still have good cash flow. We're not into a negative cash flow situation yet. And then notes 6 to 10 just provide further breakdown of those items in that first element of the fund account. Then we have the returns on investment section in there, and there are 3 elements in here. There's the income from the investments, there's the movement in the overall value of the investment assets, and then there's any profit or loss on forward foreign exchange. Note 11 gives more detail on the investment income. And it's worth noting, though, that we hold accumulating units with Border to Coast. So this is where income is reinvested and not actually received back to the fund, because we don't need it at this point to receive benefits, because we are cash flow positive. And you can see the impact that the increasing interest rates have had over the year on the cash balances. So that's increased tenfold from 233,000 to 2.3 million over the year. Movement in the overall value of the assets show we had a small decrease in value over the year following the significant growth that we had the previous year as part of the kind of the COVID bounce. And then note 13 provides further details on the profit loss of the forward foreign exchange. This is really just used by Morgan Stanley as part of their management of the private markets mandate. The second statement there then is the net asset statement. So this has two sections, one for investment assets and one for other assets and liabilities. And note 12 provides further details on the fund's investment assets and liabilities, and it analyses it between the type of investment, the manager, and the types of transactions we've seen during the year. And then there's further information on investment assets set out in other notes, such as note 14, and covers the approach taken to valuing each asset and categorises them. And then note 16 considers the risks arising from the investment assets in a financial sense. There are other notes, in addition to those supporting the income and expenditure and asset values that I've mentioned already. So note 17 and 18, information that the actuary provides us on the valuation of the fund liabilities, and then note 24 on the capital commitments. And then to try and assist the reader at the end of that, we have a glossary of terms. Following that then is the audit opinion, which we hope to have ahead of our deadline of publication, which is the 1st of December. So different to the council's deadline for its statement of accounts, our deadline is the 1st of December to publish our annual report and accounts. And then lastly, the additional information, which, as I said previously, I haven't included in this reporting pack because there's a requirement to actually have copies of all these documents in the annual report, which does make it incredibly cumbersome rather than just having links to it. The documents that we have to have under that additional information, though, are the funding strategy statement, our investment strategy statement, our communications policy, our governance compliance policy and statement, and then our shared service admin strategy. So that's quite a whistle-stop tour through what is a very large document, but hopefully it's just put a bit more clarity around what's in there and why, and I'll happily take any questions. Thank you.
Thank you, Joe. Thank you for a very informative report. Any questions? Yes, Mark?
When I was looking through the report, even in its draft form, I was looking for any issues that the fund had been subject to in terms of is it the ombudsman, the pensions ombudsman, in terms of either critical comments or complaints being made. And I couldn't find anything in the report. Have I just missed it somewhere?
No, that isn't something that's required to be published. We do bring that, if there are any ombudsman cases, we do bring that through the administration report. But that's the administration data that is shown there is that which we've been required to present by CITFA. So we haven't, I mean, there's a lot of stuff we could put in there. I don't think we've had any new ombudsman queries in the last year, so there wouldn't be anything in there. There are two older ones outstanding, but no, it's not a requirement, so we don't include it.
Thank you.
Thank you. Any other questions? Any comments? I'll bring you back to the recommendation on page 63 that the committee approve the draft pension fund annual reports and accounts. All those in favour, please show. That is unanimous. Thank you. Thank you, Joe. Moving on, item 8. The recommendations, first of all, that the committee, 1, approve the training policy, 2, discuss and agree the proposed areas for training future meetings, and thirdly, to approve the annual training plan. So keep that in mind as we move on. Over to you, Joe.
Thank you, Chairman. So this is the annual review of the committee's training plan and policy that's attached at Appendix A on page 211. So the training policy sets out the training and development of both members of the committee and officers of the council responsible for the management of the pension fund. And paragraph 2 to 5 set out the reasons behind the training requirements. The annual training plan itself on page 216 has been updated to reflect the new committee meeting structure and how the papers meet the SIP for knowledge and skills requirements attached to Appendix B on page 219 for your information. If you recall, last year the committee approved subscription to the LGPS Online Learning Academy, LOLA, created by Hymans Robertson. And this is included as part of the mandatory training expected of all committee members. Following feedback, Hymans have updated LOLA, and all users will be expected to work through the modules again, as Councillor Strengle mentioned. But there is an expectation that the core learning plan would be revisited annually or at least every other year to meet the committee's knowledge requirements. And just as a reminder, the training requirements are set out in the training policy, are detailed at paragraph 20. Following the positive feedback from the training held at Border to Coast's offices in June, an annual visit to Border to Coast has been added to the training plan to enable the committee to gain a better understanding of the structure and governance of the company and asset pooling generally, and to receive training across the areas of investments and stewardship. And the date for this will be agreed in due course. And this will be solely a training day. We will not be looking to combine it with a committee meeting so that there is more time to cover the areas that the committee would like. And as part of the new committee meeting structure, there's an opportunity for training at each meeting. So today we've had that run through of the annual report. So the proposal that I'm bringing for September's meeting, it's an investments meeting. So we'll be having our manager on the private markets, Morgan Stanley, coming to present on their performance, and thought it might be useful to have them provide some training on private markets, private equity, private debt, infrastructure, what they do, bit of background on the asset classes there. So if the committee are happy with that, we will invite them to extend their presentation to do that training. And at the October meeting, which is the administration and governance, Rachel Elwell, the CEO of Border to Coast, has requested that she can come and speak to the committee, and she'd like to discuss the strategy going forward for Border to Coast up to 2030. So again, if the committee are happy, we will progress with inviting Rachel to that meeting. And then there's also an opportunity for any other areas of training that the committee would like me to put on for future meetings. So that was all I was going to say on the paper, so I'll happily take any questions. Thank you.
Mark?
In terms of the 8 modules in the LOLA item, do we need a new email from Hyman Roberts with access to it, or is it still valid somewhere in my emails from some time ago that I might not be able to find anymore? And there is a password requirement as well, isn't there?
Yeah, no, what I'll be doing, because I need to notify Hymans of the new committee members, so once we're ready to move to the new system, there'll be emails that come out with log-ons and reminders and guides.
Yes, thank you. I was going to ask a very similar question. Thank you, Mark. But for new members, of course, a lot of stuff that's been talked about today might have gone over your heads a little bit without being patronising. It is difficult sometimes to get your feet under the table as new committee members and pensions, because it's quite intricate and very involved. I think on the Hymans Robertson side, I must admit, some of the going through the administration part of LOLA, you know, it's something that wasn't something I was all that comfortable about answering. You would be the opposite, obviously, Joe. You would be brilliant at it, as you are. On the fund management side, I loved it, you know what I mean? And sometimes some of the modules can be a bit daunting, but for those that have not tried it, you can go back and do it again to when you get to that little exam at the end. Mark, I know you were dying to say something there, and then you've probably just thought, I better not say that. I know what you're thinking. But certainly it is important. It is a SIPFA recommendation, requirement, not a recommendation, and we've all got to adhere to it. So give it your best shot. But Joe's always on the end of a phone if necessary, and Hymans Robertson, I think, may be a good idea to have them back sometime in the future and talk through Lola as well. If that's possible to fit it in any of our committee meetings without having a meeting just for that. Obviously, the training day in Leeds is a good idea. The last time we went, for those that were there was a few of us there, we had the training in the morning and then the committee meeting in the afternoon. Now it's going to be all training, as Joe said, and that's going to give us a better insight into the workings of Border to Coast. And on that note, I'll just say that, you know, I keep asking everybody, well, obviously not new committee members, to, if you've got a question for me to ask at Border to Coast, for those new members, I'm one of 11 chairmen that actually deal with the issues regarding Lincolnshire Pension Fund and all the other pension funds, Surrey Pension Fund, etc., etc. Ask the questions to me, send the question to me. I will ask it on your behalf, and then I'll feed back to you at the next committee meeting the answer to your question, if you so wish. That's all I have to say. Joe, anything to finish off on?
I'd just like to say, you know, before I've scared off everybody with the training requirements, it is collective knowledge. It's not that everyone has to be an expert on anything. It is the collective knowledge of the committee that we have to evidence and prove. So, but, you know, as I say, my team are always here to answer any questions anyway. So, thank you.
Roger?
Chairman, really for the benefit of the new members, I mean, given that there's the regulators toolkit and there's Lola, which one are the members supposed to do first?
It's really what fits in. There's, within the policy, there's a 6-month window to do TPR training, the pension regulator training that we require, and it's a year to do Lola because it is a lot more extensive. So it's, there isn't a you must do one before the other. It's down to an individual to look. I think the pension regulators one is probably simpler because a lot of it is just common sense. Some of the investment stuff requires a little more thought because of the technical jargon and new language and different things in some of the areas. So personally, I would probably recommend doing pension regulators training first because that's more about control environment and oversight, and then move on to the more technical side, perhaps on the admin regs, the investments, etc., through Lola. But you can dip in and out. It's not that you have to do any of these in one go. You can dip in and out.
Okay, Roger. Just
Well,
yeah, go on.
I was saying, just thinking of the new members. I mean, from a personal point of view, I felt that, well, I feel that the regulators toolkit was better to go through than Lola. I found Lola. I just found it a bit of a pain, to be perfectly frank. Now, if they've changed it, fine, but I don't think they got the best speakers, one of them in particular. But no, I found it, I wouldn't say difficult, but I just found it boring. But I know I'd got to go through it, and you couldn't jump it. That's the other thing.
Yeah, I think I haven't seen the new system, but it is supposed to have picked up on some of the comments that have gone back and should be simpler and hopefully more interesting.
So, Joe, two points. You're going to send some more information about Lola to all the members, and maybe a reminder of the TPR as well, if you could, please. Obviously, I've done that in the past. I don't know whether we have to keep doing it. What's the go on?
Well, TPR, I wouldn't say at this point, if you've done it before, that there's a reason to redo it, because we are awaiting the used to call it the combined code, it's now renamed as the general code, that we've been expecting for the past year at least, if longer, yes. So once that is done, there will be some new training I would imagine that TPR will issue on a toolkit. Now, currently the toolkit is purely, the one that we do is purely on the public sector because it relates to Code 14, which is specifically public sector. The new general code is one code for all. So I don't yet know what they're doing. They have been questioned on will there be specific training then that will come after that, and the answer is yes, but when that comes I don't know. So I think the TPR code toolkit that's there currently will probably remain there for a while even after the new general code is out, but you can go back in and refresh yourself, but and there are occasionally new modules that come out. We spoke about the scams module I think last year, that if members wanted to go in and look at that, but it's whereas Lola, the investment world will update a lot more frequently than perhaps the oversight world of the pensions regulators, which is why there's a recommendation at least every 2 years to go back and refresh on Lola.
So just, I mean, time is the biggest problem with these things. We're all very busy people, you know, a lot of us are doing other things outside of politics as well, you know, and family time and all the rest of it. But just to clarify, the pension regulator requires us to do their training. Okay, and that's accepted by SIPFA, yes? Lola, is SIPFA aware that we're doing Lola?
So the pension regulator requires board members to do the training. Yeah. We, within our training policy, have said actually the decision makers are the pensions committee, so they should really do the training too, and that's a decision that the Lincolnshire Pension Fund has made, that it is best practice that the committee do it too. SIPFA won't have oversight of TPR.
That's what I was thinking, yeah.
Lola is a separate thing. The consultation document that's just come out has a chapter in there, an element in there about increasing training requirements for pensions committee members. So we've always been trying to be ahead of the game because it's that rather topsy-turvy fact that our board members who are not the decision makers have to have a higher level of training than our committee members that are making the key decisions. So we've always tried to be ahead of the game by having this mandatory training in place. So SIPFA, I'm sure they've looked at what Hymans have produced, but Hymans have tried to produce something that say there's a number of funds. I think last year there was about 30 funds that had signed up to it. So it is something that is growing across the LGPS community using that.
Okay, thank you. Apart from us all bursting into song about Lola, I'm still trying to figure out what it stands for. Is Learning Online Authorization? That's the closest I can come up with.
LGPS Online Learning Academy.
Well, I wasn't even close. Thank you. Thank you, Joe. Any other questions or comments? Peter?
Yeah, I'll finish on a light note. I think Roger's perfectly right what he says. I felt the toolkit kept you interested. It looks as though Lola, bless her, is going to depress us. So let's hope the next meeting is not a depressing meeting, and we can keep a bubble going.
Oh, sorry if I've depressed you, Peter. Try my best. But any other comments, questions? Give it a go anyway once we've got the new login details from Joe, and it is important that we keep up the speed. Yeah, it's a lot to take in for new members. Can understand that. We've all been there, so you know it's no different from anybody else coming in. Just give it a go. Thank you, Joe. Are you happy to finish on that note? Yeah. Okay, and we'll bring you back to the recommendations on page 203, which are threefold. 1, to approve the training policy. 2, to discuss and agree the proposed areas for training in future meetings. And thirdly, to approve the annual training plan. We'll take that as one recommendation. So all those in favour, please show. That's unanimous. Agreed. Thank you. That concludes our meeting in probably record time. I can't remember ever finishing before 11:30 before, but maybe we have. So thank you for all members attending, and thank you, Roger, for board, on behalf of your board. And thank you, Joe, Michelle, and Tom. And I think that's Robert at the back. I was close. Same alphabet. Thank you, Josh. That concludes our meeting. If you've got any questions for me or Joe, tell us after the meeting. Okay. Thank you.